Bank customers locked out of their own accounts and unable to access money through ATMs. Cost of goods are out of control, and the truth about all the lies being told surrounding the perpetual truck driver shortage, is it not real? Plus, how new bank rules could create a two-tiered banking system after the latest updates to the FDIC and bank deposit insurance regulation changes. Hey, welcome to the channel, and thank you guys for watching. If you like the video, hit the thumbs up and subscribe. If you don't like the video, then do me a favor and smash the thumbs down button and leave a comment and let me know why. Okay, so Chase Bank customers in California, Texas, Florida, Ohio, New York City, and Arizona experienced difficulties accessing money through ATMs over the long Labor Day weekend. And over 16,000 Chase ATMs nationwide were affected due to an internal technology-related issue. Customers reported outages on social media, and Down Detector tracked around 900 outages at its peak. Although Chase has since restored ATM services, some reports of outages continued as of Monday, and customers expressed frustration and called for fee waivers due to the inconvenience caused by the holiday weekend disruption. Separate from the problems with Chase Bank ATMs, customers, including retirees, are facing distress as another U.S. bank, Green Dot Bank, freezes accounts amidst concerns of fraud. Green Dot, an online-only bank, offers an extremely limited selection of services, but it offers a high-yield savings account with a somewhat competitive APY. But in order to access this savings account, customers are required to open a cashback Visa debit card with Green Dot. And numerous people have reported issues with accessing their accounts, with some claiming unauthorized charges. One Green Dot Bank customer has been battling account freezes for over 2 years with no resolution, despite having provided the requested documentation, while another 78-year-old retiree and Green Dot account holder has been unable to access her account since August 4th, has noticed unauthorized charges, and is facing delays and uncertainty in receiving a replacement card. Needless to say, this situation has raised alarm about customer experiences with Green Dot Bank. A few other banks that we should discuss, because there have been numerous reports that banks are now closing thousands of accounts daily. Several banks in the UK have been closing thousands of customer accounts every day, with a notable increase in closures over the past year. The number of closed accounts has risen from just over 45,000 between the years of 2016 and 2017 to more than 343,000 in the 2021-2022 timeframe. So that is the equivalent to over 1,000 closures per business day. Customers and organizations often receive little or no explanation for these closures, though banks sometimes cite concerns about financial crimes like money laundering and fraud as reasons. And the Financial Conduct Authority, the FCA, suggested that increased monitoring by banks might contribute to the rise in closures. Also, the UK government plans to change rules around account closures, including requiring banks to provide longer notice before shutting down accounts. And for people in the US, banks like JP Morgan and Bank of America have also faced public scrutiny for their actions. These US banks are facing scrutiny for freezing accounts, restricting withdrawals, and occasionally closing customer accounts without clear explanations. CBS Los Angeles reports on incidents where people found their bank accounts abruptly closed, and one person just found out that their Bank of America account was shut down without explanation, leaving him unable to access his savings to support his family. So what they're saying now is that banks typically take these actions due to suspicions of unusual or suspicious behavior. However, statistics from the Banking Policy Institute show that only a small percentage of such reports lead to follow-up investigations and arrests. And in some cases, customers are left without access to their funds for an extended period while the bank reviews their account. So needless to say, this issue has gained attention due to its impact on customers' financial stability. And back in July, you guys will probably remember the videos that I published explaining how there were reports of Bank of America customers experiencing account freezes or closures when linked to cryptocurrency platform Coinbase and other problems related to Zelle. And now, today, the U.S. Treasury Direct is currently freezing customer accounts, causing users to lose access to their funds for extended periods ranging from weeks to months, with one reported case leaving someone's account frozen since all the way back in April following a $1,500 deposit from a settlement that they received. So Treasury Direct allows users to purchase securities directly from the U.S. Treasury, but it's noted that financial institutions have priority access to Treasury Direct's auction house, potentially limiting liquidity for individual investors who may need to access their investment capital before securities mature. And this account freezing issue has prompted concerns among users, with previous instances of similar problems reported, highlighting frustrations with customer service and access to funds. The situation is ongoing and is part of a larger trend of banks freezing customer accounts across the nation. And while we're on the subject and topic of discussion, focusing on banks and our money, regulators may be working on ushering in a new two-tiered banking system as part of a complete regulatory overhaul for large and mid-sized banks, which could lead to strong pressure for those banks and their customers really soon. So the Federal Deposit Insurance Corporation, the FDIC, has introduced new regulations that will require banks with assets of at least $100 billion to issue long-term debt to absorb losses in case of potential financial troubles. And these new regulations could lead to a two-tiered banking system. It has been explained that these rules would apply to many mid-sized to large banks, increasing the pressure for them to merge. However, smaller banks would not be impacted, creating a divide in the banking industry. It was also mentioned that these new regulations come alongside other changes, such as capital rules that will raise capital requirements for large banks. And additionally, there are ongoing developments like the Community Reinvestment Act overhaul and rules on late fees and data collection by the Consumer Financial Protection Bureau. They also pointed out that the economic pressures, including tighter interest rate margins and lower loan demand, would affect banks, with larger banks being better equipped to handle these challenges. So this could further incentivize mergers among mid-sized to large banks. And regarding credit conditions, it's likely to be expected that the tightening of credit conditions is partially due to and will continue on its current path due to the interest rate increases, which make borrowing more expensive and reduce speculative loan investments. But it's important to note that these economic effects are separate from the regulatory changes, but contribute to the overall challenges facing banks right now and in the future. And that's just not really what people want to hear right now.
Americans feeling the squeeze from inflation as costs of everyday food items such as eggs, bacon, and milk cost significantly more than in previous years. Two small business owners are joining me now to talk about how inflation is impacting their work.
Now, I really don't think you all need an explanation of just how bad inflation is affecting us all, but a quick rundown on how inflation impacts businesses would look something like this. Simply put, it's like a price hike for everything, and it can make life tougher for people who run small shops or companies. For instance, businesses experience higher costs. So imagine you have a small bakery. You need flour, sugar, and eggs to bake cakes and make delicious snacks. But when inflation happens, the price of these ingredients goes up. It's like if the cost of making your favorite sandwich suddenly got more expensive. And for small businesses, this means they have to spend more money on the same stuff that they need to run their business. This in turn results in rising prices. So when you go places like your favorite ice cream shop and notice how things have gotten pricier recently, that is all because of inflation, since businesses have to charge more for their ice cream. But if they make it too expensive, people might not want to buy it anymore. And this can make it tough for small businesses to keep their customers and stay in business. This can lead to layoffs, store closures, bankruptcy, and further economic decline. Inflation also causes uncertainty and makes planning very difficult. Inflation is pretty much like a roller coaster for businesses. Prices can go up and down quickly, and it's hard for small business owners to plan for the future. I mean, it's kind of like trying to guess if the weather will be sunny or rainy next week, just based purely on guessing alone. I mean, sure, the weathermen and weatherwomen and meteorologists on TV make it look easy, but that's because they have those cool interactive maps behind them. But for businesses, this guessing game makes it tricky to figure out how much money they'll make and also how much money they'll have to spend. Loans also become harder to get, and sometimes businesses need to borrow money to grow or cover expenses. But when inflation is high, banks and lenders tend to be more careful and overly cautious. They might flat out just say no or charge extra interest, which makes it harder for small businesses to get loans and the funding they need to continue operations. Overall, inflation makes it so there's just less money to spend. Okay, so imagine if you had to pay more for your groceries because of inflation. Now you might not have as much money left over for other important things. So when prices rise, people have less money to spend on the things that they need, want, and or enjoy. And this can hurt businesses that rely on people buying their stuff. But it doesn't just stop there. The staff is feeling the squeeze too, and now these businesses end up paying employees more because of inflation. And when prices go up, workers might need to earn more to afford everything, especially if they're earning near minimum wage. So this can be a good thing for employees, but it can add to the costs for small businesses to operate too. Other problems small businesses face because of inflation include complexity and increased challenges attempting to manage inventory. Further realized losses through exchange rates because some businesses sell things to people in other countries, and when inflation changes exchange rates, it can affect how much money they make from those sales. The business's taxes might go up, and it just makes it harder overall to find solutions. But for the small business owners who are smart, they'll look for ways to effectively deal with inflation. They might change prices, talk to their suppliers for better deals, or find ways to save money in other ways. It's like trying to solve a puzzle to make sure that their business stays strong. But in the end, inflation is a serious and tough challenge for small businesses. It makes things more expensive and can lead to uncertainty. But small business owners who are resourceful and find ways to adapt to these changes and continue to work hard, they will have the best chance of winning the fight to keep their businesses going. And lastly, the perpetual truck driver shortage is not real, or at least that is according to FreightWaves. And the idea of a never-ending shortage of truck drivers in the market is not entirely accurate. And yes, while some specific trucking fleets may experience driver shortages from time to time, the trucking industry tends to balance itself out rather quickly. They said that one key factor is that starting a trucking company is relatively easy, and this has led to a significant increase in the number of trucking carriers over the past 4 years. The Federal Motor Carrier Safety Administration issued operating authority for motor carriers of property, and it grew by 45% from July 2019 to August of 2023. However, during the same period, truckload demand only increased by about 11%. And so obviously there is a disproportionate imbalance in those figures. So the current challenges in the trucking industry stem from having too many trucks chasing too little freight, not necessarily a permanent driver shortage. And the myth of the perpetual driver shortage often comes from larger trucking companies that struggle to recruit drivers into their fleets. They end up having to compete with other trucking companies, and some drivers also choose to work in other industries like construction and warehousing. Plus, the American Trucking Associations also plays a role in perpetuating this narrative as it represents midsize and large trucking fleets, which make up a smaller part of the industry compared to independent operators. The ATA's interests align with larger fleets, and they advocate for programs to recruit and retain employee drivers, creating the illusion of an ongoing driver shortage. However, data shows that smaller independent fleets are growing rapidly, and this shift has led to a decrease in the percentage of total trucking capacity held by mid-size and large fleets. And these smaller fleets often have an advantage in recruiting drivers because they offer more autonomy and control over their work. So basically, the trucking industry experiences fluctuations in driver supply and demand, but the idea of a never-ending driver shortage is not entirely accurate. The market tends to correct itself, and smaller independent trucking operations are still on the rise. And while this trend may lead to more significant boom and bust cycles in the industry, it's currently addressing the capacity challenges we face today. So I really do hope that you enjoyed this video, and if you did, hit the thumbs up and subscribe. And if you didn't, that's okay too. Just do me a favor and smash the thumbs down button and leave a comment and let me know why. Channel memberships are available, as well as lots of other valuable links in the description. Thanks for watching. I'll see you guys soon.